Hello, I'm Finola from RaaS and welcome to our 2023 Outlook series. In this session, we're focusing on Ricegrowers, which trades as SunRice, ASX ticker SGLLV, and joining me is Group Financial Officer, Dimitri Courtelis. Welcome to our Outlook series today, Dimitri.
Thanks, Finola. Good to talk to you again.
And SunRice delivered first half FY23 revenue growth of 34% to 758 million and EBITDA growth of 13% to 41 million, while incorporating supply and cost pressures. The business looks to be in a strong position going into calendar 2023, Dimitri. Is there anything to suggest otherwise?
No, we're quite pleased with the way the first half has delivered. And particularly coming out of a strong Australian crop, or back into a strong Australian crop after what was almost 3 years of quite significant drought, we were able to pivot the business and position it quite nicely back into our global markets and make up those lost opportunities when we didn't have the rice available to sell overseas. And it just talks to the strategy of our global supply chain and the way we've set up these supply chains in all the jurisdictions that we operate in, so that we didn't miss out on a lot of those opportunities over the last 3 years, but we weren't able to fulfill them to the extent that we would have liked. And pleasingly, we've bounced back pretty well in the first half of FY23, and we expect that to continue into the second half.
And Dimitri, I guess it's always the way, but we're now in a position currently where Australia has rice thanks to recent rains, with much of the northern hemisphere is in drought with rice production falling. What are the opportunities for Australian rice exports, and have we seen them in the numbers yet?
They have started coming through in the numbers. The first half result for our rice pool was up about 60% compared to prior period from a revenue perspective. And we also called out our paddy price guidance going up to the $435 to the $470 mark at our half-year results. So those opportunities starting to come through. Remains to be seen when the Northern Hemisphere are going to tip out of their drought, because they're experiencing El Nino and we're actually experiencing La Nina in the Southern Hemisphere. But we've reacted quite quickly, and pleasingly, we've made up a lot of those international markets that just cannot get hold of any rice at the moment because it's so dry. So we expect that to continue into the second half of FY23 and see how we go into FY24.
And freight costs in absolute terms were up 59 million in the first half, which in comparison to your reported underlying EBITDA of 41 million is significant. What are the mechanisms to recoup these costs, and can they be recouped and over what time frame?
Yeah, it's been very challenging. It's not a one-for-one exercise. Pleasingly, we've got a very strong brand in a number of the markets that we operate in, and we've been able to take price in some of those markets. Not a straightforward conversation, trying to take price in markets and those conversations with retailers, both locally and internationally. But pleasingly, we've managed to get a fair amount of price through, which has helped to recoup some of those supply chain costs in particular. There has been a bit of a lag because those costs came through pretty much from day one. And, it takes up to 12 weeks, depending on which market and which customer you're dealing with, by the time you get some of those prices through. So the first half was a bit of a mix in terms of not seeing those prices come through to the full extent. But we expect that to come through in the second half. And that's all dependent on volume being able to hold. When you consider the inflationary environment that we're in and the cost pressures with consumers, remains to be seen in terms of how much this is going to impact, the ability for consumers to actually, go out and fill the pantry as they have in the past. But rice is a pretty resilient product in terms of it's a staple product at home. And with the brand that we have, we think we're well positioned to, at least maintain the opportunities that we've called out.
And Dimitri, M&A has been part of your SunRice's 5-year strategy. Is it still on the table near term, given all the volatility issues surrounding freight costs and product and currency, or are these issues creating opportunities?
Yes, very much still a core pillar of our strategy, and we've spent about 120 million over the last 3 years in M&A activity, and pleasingly, the businesses have been acquisitive, and we filled out the space where We haven't participated from a market perspective previously, whether it's in CopRice or in Riviana. So we feel we're filling up those spaces on the board quite nicely, and continue to look at opportunities as they present themselves. We really look through the year, not just the one ahead, but beyond. So we're looking for solid businesses, those that make sense, and where we can extract some synergies and overlay that into the benefit of the SunRice group. So yes, absolutely, just waiting for the next right opportunity. But we're as active as we've always been. M&A is absolutely a key component of our strategy.
Well, Dimitri, Courtelis, thank you for joining me today to discuss the 2023 outlook for SunRice. I look forward to catching up with you through the course of the year.
Thanks, Finola.